it's a get rich slow kind of game.
Welcome to the 5 Questions Podcast, where we unlock real estate and business insights one question at a time. Welcome to the 5 Questions Podcast. My name is Mario Lamar. I'm the host of the show, and today our guest on the show is a former Toronto firefighter who turned his passion for real estate into a highly successful investment career. His journey is one of resilience and innovation, showing us how strategic thinking and adaptability can lead to immense success, even in volatile markets. I present you Paul D'Abruzzo. Paul, welcome to the show.
Welcome. Thanks for the great intro.
Paul, the concept of the podcast is very simple. 5 questions about either real estate or business, and we get straight to the point. You ready?
Yes, sir.
So, as mentioned in the intro, you transitioned from a stable career in firefighting to real estate investing. What inspired that leap, and maybe how did you prepare yourself for that change?
Yeah, it wasn't easy. I started investing in real estate 15 years ago, right about 2010, and I was actually just getting hired to the fire department at the same time.
Okay.
So, I mean, I was a fireman and a firefighter for about a decade, and was building my portfolio the whole time. Firefighters like to have side gigs. A lot of them are tradesmen or carpenters, and I know guys who set up movie sets, like crazy stuff, and car mechanics. And my side gig, you could say, was real estate investing. Uh, but it grew, and thankfully, thank God, it grew, and it did well for us. We worked really hard to grow a portfolio that had a positive impact on our lifestyle, but we got to a point where it was large, large enough that it was taking up a lot of time. Plus I needed to dedicate myself to being a good firefighter. Plus I had a family, a wife, 3 kids, and on top of that, believe it or not, I had gotten my real estate license, and shortly after I started investing, and was specialized in only working with other investors, helping them acquire more investment properties. So the same way what I was doing.
Yeah.
So I was doing all those things at the same time, and my health started to deteriorate near the end. Just a lot of stress, too much work, not enough Paul time, and something had to give. It was either give up my family, give up real estate, give up my business, or give up firefighting. So it took me about a year of, you should say, healing, and to get the mental clarity to finally let it go. And I guess I had to come to the conclusion that enough was enough.
Yeah.
Right? Trying to do all those things at the same time, although it was getting me ahead for so many years, was actually having a negative return on my lifestyle after a certain amount of time. So it took me some time to realize that, but that was the origin of how I kind of started and how I left the fire department.
This is a great story, and sometimes you're right. We try to juggle a bunch of different balls at the same time, and sometimes when it's too many, we're gonna drop some, right? So it's better to take a step back and do the things that we love and the things that brings us fulfillment at the same time.
That's right. Right around that time, I coined a new term. After coming to all these conclusions, we've all heard the term return on investment, ROI.
Yeah.
So I coined this term, ROL, return on lifestyle.
Oh yeah. Yeah.
So what I mean by that is, the bigger decisions I make and the bigger investments I make have to have a good ROI. Of course, they have to make money, but they also have to have a good positive impact on my lifestyle also. And I find that's something we don't look at very often, and we don't measure.
Yeah.
Right?
Yeah.
It's easy to say, yes, I'll buy this property and it'll help me in my retirement later, but that's not good enough. We have to dive deeper, and maybe that's for another podcast, but it's the ROL calculation is important.
Absolutely. I want to go to the second question because it's a little bit interesting. When you decided to start investing in real estate, you started during the 2009 financial crisis,
Mhm.
2009, 2010. What lessons from that time did you carry forward into now your more recent investments?
Yeah, yeah, interesting time. Well, I was at the time I was young and stupid. Was 23, 24 years old. You're kind of in that stage. You don't know what you don't know, right? Like
Yeah, yeah,
you haven't even had time to make mistakes. So, I was reading lots of books, like I'm sure many of you have, or you and your audience has. Excuse me. And I attended a conference in Toronto. It was hosted by one of these kind of guru mastermind kind of guys. His name was T. Harv Eker. He wrote this book called Millionaire Mind something. And then his whole thing was to get you into this conference. And at this conference, he would sell you like a big ticket conference somewhere else. So I remember being young and stupid or let's say young and naive. And he was selling this conference there called Never Work Again. All
okay,
about how to build passive income streams so you never have to work again.
yeah,
So I attended this conference in California by myself, um, 23 years old. And, quick story, we're there and they did this, big energy thing, like a Tony Robbins style, get
yeah,
everyone fired up. And then at the end of that, they're like, okay, everybody under 30, stay standing, 29, 28, 27, 26, 24, 25. And by the time they got to 23, it was me and one other guy in the other corner. And I'm praying, like, please, buddy, please don't let it be me, right? So the guy goes 22, and I sat down, and the guy in the front there was 22, and he gave him some award. Anyways, when I was there, again, young and naive, it was just as the financial crisis was starting to happen, and they were talking about it like crazy, right?
yeah,
But the one thing I noticed, three things. One, uh, the people who had passive income were okay. And how do you get passive income? Well, there's a million different ways because this conference had all these things. But I noticed that more than half of them were somewhat real estate related,
yeah,
rental properties, buying tax liens. Americans, they have all these creative things,
yeah.
right? Mortgages, anyway. And then the last thing I learned was cash flow. And I'd never heard this word before. I'm like, well, what the hell does that mean? And it just stuck in my mind. So when I came home, I was like, okay, passive income, real estate, cash flow. You know what I mean? I guess back to your original question, the lessons about the financial crisis sort of came after all the smart people had a chance to dissect it all.
Yeah.
But in the middle of it, what made me decide to invest was those three things. I figure from all these people who are getting killed, all the ones who are doing well were doing those three things. And if I can do those three things, I'll be okay too. If that
So
makes
that's
any sense.
that's what made you continue to,
That's what made me continue. Yeah.
to carry forward till your investments today.
Yeah, I mean, we pretty boring. You know, we started with single family stuff. We did rent to owns, we did studio rentals, we did smaller multifamily, we did duplex conversions and larger multifamily conversions. We've done development projects both to sell for profit and to keep, for more rental income. And I would say nowadays we're basically in that small to medium sized multifamily range. We find that's the best bang for your buck.
Yeah.
Gives you the best of all worlds in terms of investment and ROL, and that's what we continue to do. We've been developing and building our own brand new. That's where we've kind of shifted with some of the advantages that CMHC and their programs offer.
Yeah, yeah, yeah. Well, that brings us to a third question. And now let's not go back too far, maybe around 3 years ago.
Mm,
Navigating the 2022 surge in mortgage payments. There
mm.
must have been a challenge because you have a lot of properties. How did you adjust to those rising costs and still keep the portfolio growing?
Yeah, three things really. And at the same time as this happening for me, it's happening to all the investors that I work with. I consult with, coach, you could say, work with about more than 200 investors here in Ontario, helping them acquire, buy, sell, and figure out their portfolios. So everyone was going through this at the same time.
Yeah.
So I look directly at myself and I'm saying, okay, if I can figure this out, then I can help everybody else. I can continue to be valuable for everyone in my business. So what we did is, establish or improve relationships with our current tenants. What we didn't want to happen is for them to see us as the evil landlord,
Right.
right? And create that rift. So and just that eliminated a lot more risk of them not paying or trying to find clever ways to not pay and using the system kind of against us,
Yeah.
right? So that was, I don't want to say an easy one, but an obvious one. Number two, we had to sort of relook at our portfolio and go through this process of the same way at the end of a season, you're going to pick all the fruit from your fruit trees and cut off all the dead branches,
Yeah.
right? That's what we had to do to our portfolio. We spent, the better part of 15 years basically in an acquisition phase, just buy, 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 buy. There was never a reason to sell unless you were selling to go get something bigger.
Yeah.
Excuse me. But in this stage, I mean, for myself and many other investors, we had accumulated so much equity. We had to relook at the portfolio and say, where are the spots or the properties that are doing the best, and which ones are not performing anymore? So, we went through that process and decided to sell a few properties. Some we refinanced,
Yeah.
and able to put cash on the table and get rid of some properties that were just not cash flowing enough to manage the higher interest payments. And the third thing we did was, of the properties we were keeping, which of those properties could we improve to dramatically increase income? Which properties could I add a basement apartment? Which properties could I, build what do you call it, a garden suite?
Yeah.
Which properties had really low paying rents, et cetera, et cetera. So those three things we did. We dramatically improved our portfolio and then used the CMHC program, which sort of came out at the same time to continue to grow and play offense.
That's it's all great points. And sometimes, when you're pushed against a wall, it forces you to reevaluate. It forces you to get out of the comfort zone of having your portfolio the way it is. And sometimes we need to reevaluate what we're doing with our properties.
That's right. That's right.
Fourth question, talking about a lot of properties, you've amassed $45 million in assets.
Mm-hmm.
What strategies did you attribute to achieving such an impressive growth and a relatively short amount of time? We're talking about 10-ish years, 10, 12 years.
Yeah, I would say about 15 to be fair, but yeah,
15.
at its peak, it was, yeah, close to $45 million worth of, assets. Some of those assets were land assets that had grown significant value. Especially if when you're developing projects, as you're developing and getting to the point of completion, your asset values go
Yeah, yeah.
really high. And if you sell them, the sort of asset the books, right? So it's sort of a fluctuating number, but that was our peak, let's say. And it's really just doing what works. How we got there is just to do what works and not be distracted by shiny objects, right? It's okay to speculate. For example, I never really got involved here especially in the Greater Toronto area, in the whole condo thing. Buy it from pre-construction, sell it later, and
Yeah.
and I'm not judging. I know a lot of guys who made money, guys and gals who made money, and some people now are losing money.
Yeah.
So it's a very speculative game, and although it's profitable if you do it right, it didn't fit my ROL calculation. I can make money, but it doesn't help me
Yeah.
achieve the goal, what kind of goals I wanted to achieve. So we found what worked and we just put it on repeat. And in order to increase the results, we just did what we did, but did it bigger. Instead of 1 unit, 2 units. Instead of two, four. Instead of four, 8 or 10 or 12, and now we're building, 9 and 10 and 12 units from scratch, right?
So yeah, so like you said, there's a lot of shiny objects out there, different strategies
Hmm.
that sometimes are good for a short amount of time, and you can make money or you can lose money. But using the strategies that have been working for a long period of time, like multifamily, it might be a more stable route to choose.
Yeah, I agree. I agree. I think those who are maybe attracted to the shiny object, they see real estate as like a get in, make my money, and get out kind of
Yeah,
venture. Whereas the, me and I guess the clients that I coach, we see it as building a portfolio that continues to have an impact on your lifestyle
yeah,
for basically forever,
yeah.
right? So very different point of view, I think.
Brings us to our final and last question for today, Paul. I want to go back to the beginning with your unique background. You used to be a fireman. You went to get your realtor license. What advice would you give to anyone looking to transition from a stable job to real estate investing, especially in today's market?
Like transition to full-time real
Yeah,
estate investing.
yeah,
Well, I would say don't do it. I would say, start, like I did, and you gotta have to part-time it, or it's got to be your side gig for a while,
yeah,
unless you've got a few $1 million to start with. But for, us regular folks who are, grinding and have one or two down payments on this, right? Yeah,
yeah,
it's definitely a start. It's a get rich slow kind of game, right? You're basically playing Monopoly. You don't win Monopoly until you go around the board 40, 50 times,
yeah, yeah,
right? So um, that's what I would recommend is start slow, get one property, do it right, and then try and find ways to repeat that. I find a lot of people who are trying to start and that's their end goal. Like, I hate my job. I want to quit in 5 years. It's impossible for them to fathom, to see in reality how it is they can do that in 5 to 7 years. But that just creates confusion in your mind. I'm a big believer in, you know, uh, for lack of a better term, call it law of attraction. And if you're constantly confused and if you're constantly looking at 5 years from now and saying, how the hell am I going to do that? Like, that's what you're putting out to the universe, and that's what you're going to get back, just a lot
yeah,
more confusion. So
yeah,
what I tell people is just do one property and do it right. Then let's solve the next problem. Then we'll solve the next problem. Then we'll solve the next problem. Uh, you know what I mean? There's nothing wrong with having long-term goals, but you got to get there one step at a time. Uh, and markets change. Whatever you plan for now, I mean, 3 years from now,
yeah,
you might not be able to do that. So big goals, great. Having a very clear definition of how you want your portfolio to benefit you personally is really important. I want 10 properties so I can retire is not enough. And I'll try and make it a fast example. I worked with clients, um, you know, uh, immigrants to Canada. They were a Filipino couple. And when I met with them the first time, I typically ask, why you want to invest in real estate. And after
yeah,
several, times of digging through it, the real thing on their heart was they wanted to help their parents pay off their mortgage here in Canada because they were grateful to their parents for coming to Canada, working like low paying jobs
yeah,
and working their tails off to give these kids an opportunity to go to university and get good jobs. And all they wanted to do was help their parents pay off their mortgage. And I was like, that's it,
yeah,
right? And having that close to their heart really motivated them to get results, and they were able to do it. So something of that nature has to be close to you, and it helps you get over all the the difficulties, the stress, the nonsense, the things you can't predict, the toilets and the tenants, and everything else. So one property at a time, start slow, make it part time, have a goal that's close to your heart, and lastly, you're gonna have to surround yourself with people that know what they're doing and who've been there before. I know it's totally cliche, but I mean, if everybody around you has one or two properties and doesn't have what you want, then you're not going to go anywhere very quickly. I have
That
my own coaches, and I bet you do too.
that's what I was gonna ask you. If you didn't bring it up, I was gonna ask you how important it is to ask for help if you're just getting started, or ask for coaching. How is it, how is that important for somebody to do real estate full time?
I think it makes or breaks people. I mean, my cheesy line is there's no I in real estate, right? You literally can't
Yeah,
spell the word real estate with the letter I. Like it's a team sport. Like
yeah,
you can't do it by yourself, no matter how much you try, right? And I'm not saying you need a partner, as in someone who's working with you every day, but real estate masterminds, real estate groups,
yeah,
networks are really important. There's going to be people of various, experience levels, and if you can get involved in these groups on a monthly basis, you're going to be learning from people who are way ahead of you, and they're going to cut your learning curve.
yeah.
And you might want to make friends with some of these people also. Buy them a coffee, buy them lunch, talk to them, and I think that kind of exposure is 110% necessary. You're not going to get very far on your own.
Paul, it was a pleasure to have you on the show today. Lots of knowledge, great points. I hope that all of our listeners take a piece of your advice and knowledge on their journey. And hopefully, we'll run into each other soon again and maybe record another podcast.
Yeah, absolutely. Mario, thanks for having me. I appreciate it. If anybody wants to, I wrote a book recently. If anybody wants to download my book, you can get it at expertinvestoracademy.com/playbook. Just talks about the Canadian real estate market and how you should navigate the current economics we're going through and what you think might work. So it might be valuable to your
We'll
readers or
we'll make
listeners.
sure to put the link in the description.
Yes, sir. Thanks, Mario.
Well, all right, we'll talk soon.
Bye bye.
Thanks for tuning in to the 5 Questions podcast. If you enjoyed today's episode, don't forget to subscribe, like, and hit the notification bell on our YouTube channel so you never miss an episode. Stay tuned for more insights and tips to transform your real estate and business game. See you next time.